It is time to check in with Amanda Lang, business reporter with BNN Bloomberg and host of Taking Stock, which can be heard anywhere on the Iheart Radio network. So, Amanda, I guess we'll start with the budget. And I'm sure you've been talking about this for the past couple of days. So let's drill down a little bit and talk about the big part, I guess, as far as what's being talked about the most. That's this capital gains tax change. What are you hearing? Because I'm now starting to see people saying, wait a sec, this is not going to hurt what the government said is just the ultra wealthy. It's going to maybe hurt a lot more than they're telling us.
Yeah, I mean, the truth is it will impact people with more money than most, so not the ultra wealthy. And the initial reaction to this, Aaron, it was a little bit a sigh of relief because I think there had been fears that you might see a wealth tax or some kind of bigger picture thing. This is a tweak to an existing tax that in some ways, if we're honest, makes it more fair. It treats a capital gain a little bit more like income, and we could debate whether that is good sense or not. The thing that's hard about it is it does capture, 300,000 corporations, and that includes like incorporated dentists and doctors and lawyers. And it'll capture about 40,000 regular folks who have capital gains on the sale of, say, a cottage or some investments. The really big issue that's causing problems is it changes people's planning a little bit. You might not have wanted to sell your cottage, before June, and now you might consider it if it's going to save you some tax money. I don't think we're going to see a ton of that, but even the government thinks there will see some people selling things in advance of this in order to keep more of their gains.
So you brought up the corporate part of this, which is, I guess, the part that we're now trying to understand. Does this hurt businesses potentially doing business here if they're going to be faced with this added tax? They go somewhere else, or is that not a consideration?
I'm a little skeptical of that complaint. And again, when taxes change, it does create problems because people made plans based on the old tax and they have to rejig their thinking, and it could cause some trouble. But no, I don't believe for a minute that the pace of business investment in this country is going to be much dampened. And I'll tell you, the big picture reason for that is where we want to see business investment is at the biggest corporate level. That's where we don't see it. And that's because we've heard time and again of a lack of competition, and we don't have free trade between provinces, all stuff that has nothing to do with tax treatment. On the tax treatment side, we're pretty competitive with other jurisdictions. And by the way, this increase in the capital gains makes us equal to the U.S., what they already do. So the whole notion that somehow business is going to stop investing, it's kind of irrelevant. At the entrepreneurial level, will people not, take a gamble? They did actually create a new lifetime exemption for entrepreneurs, and there's a bunch of incentives for businesses elsewhere to make investments. So I think I actually don't buy that. I understand why people are saying it because they're upset and it's an easy kind of low-hanging fruit argument, but I just don't buy that it's going to hurt business investment.
So what about the argument that we hear from some with respect to this does nothing for productivity in the country? We already know Canada, I think we're second worst, only ahead of Japan as far as GDP for productivity. Is there anything in this budget that says, okay, we're addressing that and here's how we're doing it?
To be honest, I did see some things I really liked. There's about $7 billion in total spending on things that should juice productivity and growth, including, for instance, there's a whole suite of things that I think is worth $750 million over 5 years that businesses can immediately write off investments in new technologies. And usually that's depreciated over time. That's an immediate benefit and one that will actually kick into the economy right away. You'll go out and buy new computers because you get to write it off immediately. You get a credit for it. That is powerful stuff. There was also, at the margins, things like increasing grants by hundreds of millions of dollars, increasing student grants from $3,000 a year to $4,200. Those are totally forgivable grants. This is good stuff. It takes longer to solve the problem, but this is the kind of foundational stuff that can actually make a difference.
So, Amanda, I'm going to ask you for a bit of a political assessment here with respect to the fact that now by introducing this capital gains tax, you kind of take away some of the power of the opposition to look at this and criticize it, because that would make it seem like you are, in fact, taking the side of those who have that money.
I mean, you could look at it that way. It is hard to fiddle with taxes once they're in place because people make plans around them. So there is some stickiness to this. You could see a new government campaigning on we'll put this back where it was. But I agree with you. It does benefit. And you and I can agree. You don't have to be uber wealthy to be hit with this. You might have a cottage, you might have an inheritance, you might have any number of things where this actually captures you and you don't feel super rich. But I do think it's a tough one to sell politically. So this is probably here to stay. And I will add this, Aaron, the government is spending more than it has, right? We're in a deficit. unless we're going to demand that they hold the line on spending, they have to raise revenue, right? We cannot keep going deeper and deeper into deficit because that's debt that we're piling up for future generations. So if we aren't going to argue that they should be a balanced budget, you better look for tax increases somewhere. So we're kind of getting what we deserve in a way.
All right, let me go back to perhaps an even bigger story, Amanda. The world of chocolate apparently is in crisis. Oh my, what's up?
Well, this one has been something we've known about, but it is worsening. I mean, this is has to do with climate change. It has to do with the fact that this is a commodity that's very concentrated in a few specific regions. And so when you see droughts in those regions, as we've seen, the price of cocoa has gone haywire. We're also seeing this incidentally with coffee in certain regions of the world. And so short term, yes, your chocolate's going to get more expensive. It's an input cost in all kinds of things. So it's going to keep parts of the grocery aisle expensive for the foreseeable future. Bigger picture, I would say we're going to see more of this, unfortunately, because of extreme weather. We're going to see other commodities that are very localized from certain parts of the world. If they get hit, we're going to have to pay a price for it. So not a lot we can do about it other than, keep our eye on what we can do on climate change if you're inclined and maybe cut down on your cocoa consumption.
So the message I'm getting is we should all sell our shares in Starbucks if we have them.
Did I say that?
Well, I mean, if coffee prices are going to go up, it's at one point you're not going to want to spend $7 or $8 for a cup of coffee anymore. I know there's people saying,
it definitely could be an issue, although it'd be interesting to see where they source because there are different regions. If they're smart, they're actually encouraging sustainable farming in places where they can have good coffee sources. Coffee is a little less concentrated than cocoa, but you're right to watch it. That's something that that's where we feel these things, right? When it's a commodity price that goes up, it hits all kinds of different places.
And just finally, before I let you go, I would be remiss if I did not discuss the giant story of the week next to the budget. And that, of course, is the fact that Tim Hortons is now serving pizza.
Oh, I thought you were going to talk about Taylor Swift. Good heavens.
Oh, my God. I'm sorry. You're right.
Tim Hortons has been trying for a while to expand its menu further into the day. Interestingly for Tim Hortons, they found in pandemic that we stopped our patterns of commuting, and so we stopped our purchasing on our commute. And they quite cleverly introduced other times of the days to us so that we could walk from our home office or go at a different time. Pizza is sort of an extension of that. I think it's very smart, and they've been it's a really good example that companies that have sort of ingrained ways of meeting their customers, they can change and they can evolve. And Tim's has been doing it.
We shall see. Amanda, thanks so much. Appreciate it. Nothing on Taylor Swift. All right.
You bet.
Talk to you next week.
Bye.